Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents that companies don't necessarily want you to read. Today we are going to decode the latest financial report from Cuentas, a fintech company. It seems like they've been juggling a lot, from selling off pieces of their business to making deals. It might look like a roller coaster, but let's see if we can understand what's really going on. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat all about corporate filings. Cuentas filed their quarterly report, also known as a 10Q, with the Securities and Exchange Commission, or SEC, in July of 2025. This report gives us a peek into how they were doing up until June of 2024. Let's get right to the numbers. A company's cash and cash equivalents is like the money they have in their wallet. As of June 30, 2020, 2023, Cuentas had about $56,000 in cash. If we scroll down, we can see that at the end of 2023, they had $205,000. So they had significantly less cash in the middle of 2024 than they did at the end of the previous year, meaning they spent more money than they made. Now, let's talk about liabilities, which is the technical term for what the company owes. Cuentas had total current liabilities, meaning bills due soon, of about $3,656,000 in June of 2024, which is not good news since they only have about $56,000 in cash. Let's compare that to the end of 2023, where they had total current liabilities of $4,000. They still a long way to go. Now, a quick look at their accumulated deficit, which is the total losses a company has added up over its lifetime. Cuentas has an accumulated deficit of more than $57 million. That's a lot. It means that over the years they've lost way more than they have earned. Scroll until to condense the consolidated interim statements. Apples are comprehensive, the scroll come. Now let's check the company income statement, also known as the statement of comprehensive loss. This will help us better realize how they manage their money. So looking at total revenues for the first 6 months of 2024, they made $672,000. If we compare that to the first 6 months of 2023, where their total revenues were only $104,000, it's great to see that revenues increased by over 6x. However, before we get too excited, let's check cost of revenues, which is all the costs attached to producing that revenue. For the first 6 months of 2024, it was about $1,743, where their cost of revenues was only $276,000, tells us that the cost attached to each dollar of revenue increased. That means Cuentas is paying more to make each dollar. Next, let's look at operating expenses. These are the costs of running the business. The biggest of those is selling general and administrative expenses. For the first 6 months of 2024, that was about $1,023,000, which is a decrease from 2023 when it was $2,000 on everything from salaries to marketing, which should help in the long run. So looking at the very important number, net loss, which is what's left after subtracting all the costs and expenses from the revenue. The company had a net loss of roughly $2,517,000. This is obviously not good. However, it is a lot better when we compare it to the first 6 months of 2023, where the net loss was just over $3,000, one trend to $7,000. This tells us that the company is on the right track of making money, despite the loss in Company 3. Where the net loss was just over $3,123, where the net loss was just over $3,001 trend to $7,000. This tells us that the company is on the right track of making money despite the loss. Now we need to figure out what happened during these last few months. For that, let's explore the events during the period. Cuentas took out some loans. Let's start with their loans from February and April of 2024 to raise money. Basically, they sold these discounted promissory notes to an investor so they can get cash in advance with a promise of repaying at a later time. But the company failed to make all the payments. They had to pay a whole lot more because they defaulted. It's like borrowing money from a friend and not just having to pay them back, but also having to give them your favorite baseball cards as a penalty. Ultimately, they agreed to pay $112,000 to fully settle this debt. Cuentas entered an agreement to sell their full interests in Brooksville Development Partners for $800,000. They ended up settling their total debt for approx $666,356 debts with their major creditors, which relieved some burden from the company. Two, a company that provides e-commerce merchant services, bought almost 20% of Cuentas SDI, a digital service integration business. For this, OLB paid them a total value of $215,000. $40,000 promised to be paid later in monthly initially. $40,000 promised to be paid later in monthly installments. However, they settled it to be only $25,000 up front, and another $25,000 promised to be paid later in monthly installments. However, they settled it to be only $25,000 up front, and another $25,000 promised to be paid later in monthly installments. However, they settled it to be only $25,000 up front, and another $25,000 promised to be paid later in monthly installments. However, they settled it to be only $25,000 up front, and another $25,000 up front, and another $25,000 credited, so it seems OLB didn't pay the amount listed initially. Scroll non-binding letter CAFTAs of intent. Nicely scroll Kedge on June of 2024. Cuentas signed a letter of intent with World Mobile, a UK-based company, to work together to expand network coverage and offer Cuentas digital products to customers. World Mobile apparently transferred $50,000 to Cuentas. As I'd note, these types of letters of intent are not legally binding, but it shows interest from both companies to work together. This actually happened in April of 2025. We see that both Cuentas and World's 51% membership Honta dollars of intent are not legally binding, but it shows interest from both companies to work together. This actually happened in April of 2025. We see that both Cuentas and World's 51% membership. In 2023, here it is described that Cuentas agreed to purchase shares of Lakewood Manager LLC, agreeing that in exchange 295,282 shares of Cuentas common stock be held until certain terms were met. Those shares were never legally released and delivered to the share buyer, so Cuentas is returning back. Cuentas sold future receipts in 2024 to eAdvance Services for $80,000 and received $76,000 after fees and other costs. The way this works is Cuentas sold some of its future revenue short-term and agreed to return it in weekly payments. Cuentas failed to make weekly payments and, as a result, defaulted on this purchase agreement, costing them much more money. Luckily, they settled it at $60,000 and called it even. Now let's take a look at what has happened since June in a section called Subsequent Events. A big one is with Incom. They agreed to end their processing services agreement, and Incom agreed to waive a huge debt of $475,000 that Cuentas owed. In exchange, Cuentas had to shut down their prepaid product program managed. Huge win for Cuentas. Cuentas made a deal over money potentially owed to Crosshair Media Placement. Cuentas president and CEO guaranteed that Cuentas would pay it all, which was over $454,000. They settled the entire thing and paid it on 2025. Cuentas also settled with terms of agreement with Alexandria Calicchio, paying $28,000 to satisfy some judgment. There's a video of a pretty deep hole. The numbers tell the story. They're still losing money, but not as much as before, and they're trying to cut costs. They sold off their ownership stake in some parts of their business to raise cash. However, it is costing them significant losses. They also seem to have entered into some debt deals that went sideways, costing them much more money due to defaulting on the payments. The biggest risk is probably whether they can turn things around before the cash runs out, or if they can manage to raise even more money. On the other hand, their deal with that marketing debt from Income might actually be more helpful than it looks. They also seem to cut off some underperforming parts of their business that might improve some financial statements down the line. Overall, it's a mixed bag. Cuentas is making some moves in some right directions, selling off some parts of their operations so they can turn over a new leaf. The big question is whether they can execute these strategies into becoming profitable. Alright, that's our breakdown of Cuentas' latest filing. What's your take on these numbers? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.